Welcome everyone. Massive NFP on for tomorrow. We have dark pool activity all over the place. We've got major institutions selling into retail buying. We've got the Fed starting to look like it's shaking. We've got a bit of chaos going around the world, and we've got the dirtiest events of the year thus far, NFP, non-farm payroll. This is my game plan for tomorrow. I'm hoping it can help some of you.
I love gold so much that I even lost my genitalia in an unfortunate smelting action.
Right, so what we got going on? We've got unemployment, NFP, the monster, and we've got average hourly earnings month on month. Let's have a look at the game plan. Right, forecast 4.3%, the previous 4.2%. Potential signals that I'm looking for in the markets, and of course I'm only trading major deviations. There's going to be a strong buy on gold if the actual is larger than 4.5%. This is going to be deflationary, rising unemployment signals, economic weakness, increasing demand for gold as a safe haven. Strong sell on USD if the actual is lower than 4.1%. That's an inflationary neutral. Strong labor market may reduce demand for gold. Strong buy on the Nasdaq if the actual is lower than 4.1%. Lower unemployment could support risk on sentiment and tech stocks. A strong sell on the Nasdaq if actual is higher than 4.5%. A sharp rise in unemployment may signal economic slowdown weighing on equities. Just to reiterate, if we have inflation, that means the Fed will have to counter that by raising interest rates. That means that gold isn't looking so juicy anymore, because it's better for big institutions to be plowing their money into bonds because they're getting a better percentage return on that. However, if it's deflationary pressures, that means that it's more likely going to be reducing rates because everyone's been put under a bit of strain. That means gold will go up because its price for hodling will outweigh the price for buying bonds. Right, what else we got next? We got the monster, the NFP, the most dangerous event in day trading. Forecasted for 213,000. The previous was 227,000, so we're expecting a bit of a cooling here. Potential signals for myself is going to be a strong buy on gold if the actual is less than 170,000. This is going to mean it's heavy deflationary. Weak job growth suggests a slowing economy boosting gold. At this time of the year, with record sales for Black Friday, record sales for Christmas, everybody's credit cards being maxed out, and we're getting some huge amounts of defaults on those credit cards. I'm not too sure that that's going to be happening, but a strong sell on gold if the actual is higher than 250,000. That's going to be inflationary pressures. Strong job growth raises the likelihood of Fed rate hikes, and that is bearish for gold. I don't think we're going to be getting rate hikes, but I do think that they'll be keeping rates higher for longer. Strong buy on the Nasdaq if the actual is lower than 180,000. Weaker jobs data may ease Fed hawkishness, boosting equities. Strong sell on the Nasdaq if it's more than 250,000. Strong NFP data supports rate hikes, which could weigh on tech stocks. Again, this is going to be a bad boy. Look for the revised numbers as well. Those dirty crooks on Wall Street, they like to fuddle with this NFP number. And then our third data release for the day is going to be the average hourly earnings month on month, forecasted at 0. The previous was 0.4, so we're seeing a bit of a weakening being predicted here. Potential signal is going to be a strong buy on gold if the actual is less than 0.1%, or sorry, should I say negative 0.1%. That's going to be deflationary. Reason for that: falling wages suggest easing inflationary pressures, supportive for gold. A strong sell on gold if the actual is higher than 0.4%. That's going to be heavy inflationary. Rising wages may fuel inflation concerns, pressurizing gold. I'll see a strong buy on the Nasdaq if the actual is lower than 0.1%. Muted wage growth may ease inflation fears, positive for tech stocks. And then a strong sell on the Nasdaq if the actual is higher than 0.5%. Strong wage growth could lead to hawkish Fed policy, bearish for equities. This is a monster day for markets. It's the first big one of the year, I'd say. Watch for sharp moves in gold and indices following that release. Today, the Nas has been closed, so yeah, I think there's going to be a lot of pent-up demand for that. The 2:30 New York Open is going to be a banger. Good luck to you, and I wish you all the best. Much love. Peace.
I love gold so much that I even lost my genitalia in an unfortunate smelting accident. Smelting accident. Smelting accident. Smelting accident. Smelting.
Oh, Jesus Christ.